Hi, I'm Nikki Jovicic from LookUpStrata. Today we're speaking with Tyrone Shandiman, Managing Director of Strata Insurance Solutions and Chair of Australian Consumers Insurance Lobby, about an increase we've seen over the past year or so in questions about cash settlements for insurance claims. Why are insurers interested in cash settlements? If you're a lot owner and the insurance company has offered you a cash settlement, should you accept it? For a committee, what are the pros and cons of a cash settlement for repairs? Tyrone has joined me to explore the topic, including why we may have seen more questions about cash settlements over the past few months. Welcome, Tyrone.
Yeah, absolutely. So I'm Tyrone Shandiman. I am the Managing Director of Strata Insurance Solutions. Our business has been running now for 13 years. As the name suggests, we specialise in strata insurance, and our typical clients are committees that come to us directly to arrange insurance.
Wonderful. Thanks, Tyrone. Thanks so much for joining us this morning. You're certainly the person to speak to about this. So firstly, what is a cash settlement?
Yeah, a good question. So typically insurance is done or insurance repairs are usually done by insurers, and they will normally engage a builder and pay them directly. But there are instances where an insurer will offer a cash settlement, and that is where an owner or an owner's corporation wants to do the repairs themselves outside of the insurer's builder, and there are instances where that will occur.
Okay. And what are the risks associated with cash settlements?
Yeah, look, cash settlements come with risks, and I think that there are quite a few that can come with a cash settlement. The first one is the obvious one, that the settlement that you receive is not enough, and I just wanted to go through where that might occur. So, firstly, insurers will often settle you what it will cost them to repair a property. Now, the insurers have aggressive negotiation strategies with their suppliers. So if they're selling on a quote that they receive for repairs, sometimes the quote that they receive is below what you might be able to receive on the market itself. Also, what can happen from time to time is an insurer might have a quote for a repair. The builder might get stuck into the work, but then there's a variation after that quote. So sometimes what is quoted originally doesn't actually fit the scope of what the actual repairs are. Now, you might be able to go back to an insurer after you've commenced repairs, but it's a lot more difficult once you've finalised a claim and accepted a cash settlement. The next risk you have in accepting a cash settlement is that you are engaging the builder directly to do the work. So any issues with workmanship is a matter between you and that particular contractor. Whereas if it's an insurer's contractor, they guarantee the work, and effectively, if there is a problem, the insurer will sort that out with their contractor, and they've got agreements in place with contractors to deal with those types of things. Thirdly, you manage your repair process. So obviously you're putting in your time, you're going outsourcing builders, and I guess that's also one of, not necessarily a risk, but that's one of the things that come with cash settlements. And lastly, as well, particularly in cases where there is, for example, a leak, and it takes months for you to actually fix that leak, there could be more damage after the event and the cash settlement, right? So there are risks in that you will have to go back to the insurer and try to get additional money from them. And they may say, well, we cash settled you on this basis, and that was our final settlement. So there are some risks in taking a cash settlement, but notwithstanding, they can be appropriate in some instances.
Okay, so can you give us an outline of how that would work? When are they appropriate to accept a cash settlement?
Yeah, absolutely. So the first one is when you're looking to do work beyond the scope. So you might have damage to your kitchen cabinetry or some of your kitchen cabinetry, and you say, well, I want to replace my whole kitchen. I don't want to repair it back as it was. Or I have tiles in my bathroom. I'm going to have one wall retiled. Let's do the whole bathroom. Let's get a cash settlement. So in those instances where you want to, where the scope of works differs to what the repair scope is under the claim, that's where it could be appropriate. It can sometimes be that you get more than what you actually than what you pay in the end as well, because insurers builders are project managers that engage contractors, so they do add a project management fee in there, and in some instances it can be that you get more in the end from a cash settlement, but this is becoming less the case because insurers are now requiring invoices for settlements, right? So they're not often giving the cash up front. They're saying, give us the invoice and then we'll provide the settlements. It can sometimes, and on that point, it can sometimes be more cost effective. So what it means is that your claims history has a lower claim amount, and it's better for your claims history. And finally, well, there's two more points. So in major catastrophe events, where insurers builders are really over capacity and they're really struggling with meeting the demand of the industry, sometimes you might be able to find a builder yourself that is free and that can do the repairs sooner. And it's also appropriate in instances where there are defects as well. So, for example, you've got a major works for a leak or a defect that you need to get completed first. And it may be appropriate in some instances, particularly where you're doing other work, to get the cash settlement and do it all as one.
Okay, so we just wanted to go through as well. There seems to be a bit of confusion out there about the process when you do accept a cash settlement. And we've received questions in from owners who have agreed to a cash settlement. It's been paid to the owner's corporation or the body corporate's account, and then the committee will not release the money until the work has been complete. And then also in some instances, we've seen that even once the work has been completed and the receipts have been submitted, the owner's corporation still will not release the funds to the owners. So what is the correct process, Tyrone?
Yeah, absolutely. So, look, I'll go through some considerations first, and I might answer those specific issues after I've gone through the process, if that's okay. So, firstly, insurers will require at the minimum a quote for the work is provided. In some instances, insurers want to see the invoice before they will pay a cash settlement. In some instances, the insurer gets their own quotes and just settles on their quote. Okay, so what the insurer first needs to see is something that provides them with what is the cost of repairs. Once they've got that, they will settle cash settlements into the body corporate bank account. And there are reasons for that. There has been disputes in the past around cash settlements. And body corporate saying we are the insured, we required it into our account, not into someone else's, right? So for that reason, insurers will often only settle into the body corporate account. Some insurers might accept a form which is signed and stamped with the common seal, saying, "Yep, we allow you to pay it into this person's account." And in cases where the body corporate is registered for GST, the insurer, in accordance with tax laws, will deduct the GST. Now, this is really important to consider because when you're an owner, often owners aren't registered for GST, right? So in those instances, what we advise our clients is to make sure that any repair invoices is done in the body corporate name. And the reason for that is that the body corporate can settle you the GST inclusive amount. They'll get the GST exclusive amount from the insurer, but they will claim that GST portion from the taxman when they do their next tax return. So that's how you can get around the GST component. Now, once the money's in the account, which is what I think you've spoken about, Nikki, there's a couple of issues here. So first and foremost, the legislation across Australia is very I guess it's not non-descriptive as to what happens once the money gets into the account. So I suppose there is a level of, I guess that there can be some level of dispute here. Okay. So my first argument is that an owner is an insured party. They pay for the premium. If a claim relates to their lot, then I believe that they're rightfully entitled to any settlement that is made in that name. And I do believe that there is an argument that the body corporate should remit those monies to the lot owner, given it was for their insured property. Some states like New South Wales say that the funds must be allocated for the purpose of repairs. So any claims money must be allocated for repairs. Now, I actually had someone ask me about this particular issue recently where they provided the quote, the body corporate wouldn't pay them the money. And I kind of said, well, I think you can argue that the reimbursement, even though you don't have this specific invoice, is being used for the repairs. So it's in accordance with the law. Now, in cases where the body corporate just won't pay the money to the or reimburse with invoices, I do believe that that is a matter for dispute resolution, whether that be the Commissioner in Queensland or NCAT or VCAT or what have you. I think the owner has very good grounds to say, I'm entitled to that money. I pay insurance, I'm an insured party, and I want the money back. And obviously you can't force a committee to do anything, but there are mechanisms like VCAT and NCAT and the Commissioner in Queensland. So I would encourage, if you feel that the committee is withholding a settlement from you unreasonably, I would encourage you to firstly try to get the money from them, but secondly use those dispute mechanisms if you don't get that money back.
So if a lot owner does take a cash settlement, Tyrone, does that have any impact on the Strata insurance policy?
It has no more of an impact than a claim itself, in that if the insurer pays $15,000 for repairs to their builder or $15,000 as a cash settlement, then in essence for the insurer, the cost is the same, the claims history impact is the same. It's when there becomes disputes over settlements and then it goes to the Financial Complaints Authority that may have an impact, but just on a like-for-like basis, a cash settlement and a settlement to a builder is treated the same for insurers for the purpose of claims history.
Okay, so we've spoken about when lot owners take cash settlements. So can an owners corporation or body corporate accept a cash settlement on repairs to common property for a claim?
Yeah, absolutely. So that can be common, and I suppose it goes back to the reasons I provided earlier as to when it might be appropriate to take a cash settlement. But definitely a committee can make the decision to accept a cash settlement for a common property claim.
So the other question I had for you was, why are insurers pushing cash settlements so hard? So we read a recent article from the 1st of February 2024 claiming that insurers incentivized their case managers to complete early cash settlements, and they've pressured customers to feel they would receive lesser if they waited, and they've used bullying tactics. That was also mentioned in the article. So why is this happening, and is it occurring for strata insurance claims? And if so, is this acceptable behaviour, do you think, in the insurance industry?
Yeah, so I actually appeared before a parliamentary inquiry last week, which spoke about the issue of cash settlements, and that was raised, and I was asked questions about that as well. And I think what I saw now this was in relation to that Australia's largest insurance claim ever, the 2022 floods, major storms. And I think in the context of that particular event, insurers were pushing cash settlements, and you've got to look at the way that they the metrics of how they view claims, and obviously if they're pushing a cash settlement, the claim is finalised a lot quicker than if a builder's spending a year doing work, right? So it brings their settlement days down when they're reporting that to the various regulatory bodies and the inquiries and so on. So I think that from that perspective, insurers were pushing it back then. Not also just to bring their numbers down, but because they probably found that there was just no capacity in the industry and that it was going to take quite a while for their builders to conduct the work. So I think that there were times when insurers were trying to explain that to clients in that way. But by all means, I suppose that there's never a requirement to accept a cash settlement. You can always push back on the insurer and say, no, I want your builder to do the works. I want the safety of knowing that I'm not going to be short in a cash settlement, that I've got the guarantee of your builder, and that you're managing the repair process, not me. So in those instances, I would always, if you feel it's inappropriate to accept the cash settlement, just push back on the insurer, and I'm sure that they will be obliging in that and say, yes, that's fine. We will allow that. So yeah.
So just as a final wrap up, Tyrone, what are the main considerations for committees and owners with cash settlements for insurance claims?
Yeah, absolutely. So I think there's the reimbursement process. So I think in most cases, owners should be required to provide evidence of works. That can be invoices or quotes, or that they're starting works. Does a body corporate have to pass on a cash settlement if there's no invoice? I would argue yes. I feel that it is a settlement for a specific lot, as I've mentioned before. Does an owner have to undertake repairs? That's also a good question. So I've seen instances where a body corporate doesn't want to provide a cash settlement to an owner because they know that then they're going to have, you know, a leak in their building that's not fixed, and there's going to be structural issues. So I think that a committee can compel an owner to show that the repairs are being done before they pass on a cash settlement. And just the final thing, I don't recommend cash settlements for larger claims. And larger claims, I mean over 10,000. I've just seen so many things go wrong in these large claims. Particularly, so there might be times when it's appropriate. For example, if you're fully renovating a kitchen, that might be a time when it's acceptable. But I would highly advocate against accepting cash settlements on large claims, because there's just so much room for margin for error in these claims, margin for the settlement not being enough, there being problems with the workmanship and so on. So I always try to advocate for my clients to go down the path of having the insurer's builder conduct the work. So they're the key points that I would probably suggest that we haven't already covered off today, Nikki.
Okay, thank you so much, Tyrone. Thank you for your time. It's been great having you here, and we'll talk to you next time.
Excellent. Thank you very much, Nikki. Thank you.
If you gained value from this video, please hit like and subscribe to our YouTube channel. If you're looking for information about parking, strata insurance, defects and more, head over to lookupstrata.com.au or sign up to our free weekly newsletter via the link in the description box below.